So hi there, my name's Jason Blackman and I'm an accountant. I've been an accountant for about 20 years, just over 20 years. I'm from the beautiful south coast of England and I'm driving, as you can probably see. Now I do spend a lot of time in my car driving for various reasons, but I spend quite a lot of time in the car. So I thought what I'd do is, while I'm in the car, I'd use that time to proactively help people. So what I'm going to do every week from now on, every Friday at noon, I'm going to upload a new clip all around accountancy and bookkeeping and tax, completely free of charge, just to help you. So there's going to be weekly clips, literally just to give you help and advice in the areas of accountancy, tax, bookkeeping, etc., etc. So as I say, brand new, starting this week. This is the first clip, so I'm hoping you'll enjoy it. What I'd really like is if you could give the video a little thumbs up, subscribe, that would be really good. If you could subscribe to my channel, that would be fantastic. Just click on the subscribe button and hit the notification bell, and every time I upload a video, which should be every week now, you'll get a little notification just to remind you that it's there, and you can log in and get some hints and tips around your accountancy and bookkeeping and tax affairs. So I'm really hoping this is going to be beneficial. As I say, it's nothing flashy, there's no big studio productions here. It's just me sat in my car driving, talking to you about accountancy and tax. Basically using my time proactively to set up a YouTube channel and to help everyone out there. Now there's a link to my website in the description. If you do need any help or advice or anything at all, then my practice is called Just Pure, and there's a little link in the description to send me a message if you want to. Obviously I do run an accountancy practice full time. We do accountancy, bookkeeping, VAT, payroll, you name it. But aside from that, as I said, I just want to do a weekly information clip for everyone out there, just to sort of help out. So today, the first day we're doing this, we're going to talk all about sole trader versus limited company and which is best for your business. Now this is a question I do get asked quite a lot. I think it's always been asked. I think in my last 20 years of practice, it's a question that's very often been asked. So I'm going to try and answer that today. There's no definitive answer. It's very difficult without seeing an individual's personal circumstances what the definitive answer is. Should I be a limited company or should I stay as a sole trader? It's very, very difficult to pinpoint an exact answer for a client without seeing their individual circumstances. But I'm going to try my best to explain it today. So the first thing I'm going to talk about is being a sole trader. What does that mean? So a sole trader is probably the easiest form of business you could have. It's literally just you on your own, registering as self-employed with HMRC, which is very easy to do. Incidentally, I may sometimes say Inland Revenue because I'm old school. I've been an accountant for 20 years and I do often refer to HMRC as the Inland Revenue. So if I do say the words Inland Revenue at any point, then please forgive me. I do mean HMRC. So every time you hear Inland Revenue from me, think HMRC. Anyway, if you're self-employed, you're a sole trader, then as I say, setting up is extremely easy with HMRC. It's just literally one form filling out. That's all you need to do. You can do it online, and a really, really easy process to do. So yeah, you can do it yourself. You don't really need an accountant to set you up as self-employed, and this is one of the things I'm going to get onto in a minute. Do you really need an accountant to help you with all these things? Well, setting up as self-employed, you don't actually need an accountant to help you do that. You can do it yourself, and I know lots of people that have done it themselves. And really the only sort of thing you need to be wary of when you're self-employed as a sole trader is to fill out your tax return every year. And that's really all you need to do. You know, limited companies are a bit more complicated, which I'll get onto obviously. But if you're self-employed as a sole trader, then all you need to do once a year is submit your tax return. And once again, I know a lot of self-employed sole traders that submit their own tax return. You don't need an accountant to do that. Obviously, being an accountant, I would recommend that you do. I would always recommend that you use an accountant, even if you're self-employed. But being a sole trader, lots of clients that I have now always used to fill out their returns themselves, and it's perfectly okay to do that. You know, if you have a very small business, if you have a very small part-time self-employment, let's say you have a part-time self-employment and you're employed as well, it's pretty easy to do. So if you've got your P60 from your employment in front of you and you've got your figures from your part-time sole trade business, then you're armed with all the information you need to fill out your tax return, and it's a pretty easy process. Now, obviously, limited companies, that's a very, very different story. But as I said, I'll come on to limited companies in a minute. I just want to carry on talking about sole traders for a moment and tell you about one of the downsides of being a sole trader, being self-employed. Now, HMRC, when you're self-employed, when you're a sole trader, they recognise you as being one and the same. So in other words, HMRC make no distinction between you as a person and your sole trader self-employment business. As far as HMRC are concerned, it's the same thing. So what that means is any liabilities you build up as a sole trader, you are personally responsible for, simply because there's no distinction between you as an individual and your business if you're a sole trader. So the big downside to that is if you build up debts in your sole trade business, let's say, I don't know, you've got a bank overdraft, or you've got creditors you owe money to, you've got a bank loan, you've got HP, you've got a tax bill, you've got a VAT bill, you've got a PAYE bill, all those things are liabilities, and in HMRC's eyes, you would be personally responsible for them if they needed to chase them and your sole trade self-employment business didn't have any money, then HMRC could come after you personally for those debts. And that is a big downside for being a self-employed sole trader. There's lots and lots of advantages, as I've talked about already, but one of the big downsides of being a sole trader is that you are personally responsible for any business debts that you incur, and that is because HMRC make absolutely no distinction between you as an individual and your business. So I hope that's clear. Now, as I say, sole trader, simple to set up. Sole traders, I'm sure you're aware, you get a personal allowance each year, and for this year that we're in now, 21-22, the personal allowances are something like £12,750, I think. So what that means is you can earn £12,750 in the tax year without paying any tax. So that's good. Now, personal allowances don't actually apply to limited companies, but they kind of do as well. But I'll explain that in another video. I don't want to get too technical on this video now. I'm just sort of explaining the basics of self-employment at the moment. Now, also when you're self-employed, you'll pay your tax bill, and you'll also pay two forms of national insurance. So you'll pay Class 2 national insurance. Now, Class 2 national insurance is what I think used to be called the weekly stamp, which is just a few pounds a week. And you used to pay it weekly by direct debit, but now it's incorporated into your self-assessment, so you'll pay it with your tax bill every year. That's Class 2 national insurance. Now, Class 4 national insurance you will also pay, and that's paid on your profits. So when you've prepared your tax return, your self-employed sole trade tax return, and you get a tax bill, if you have got to pay tax, of course, if you're above your personal allowance, then on your self-employed profits you'll pay your normal tax, you'll pay your Class 2 national insurance, and you'll pay your Class 4 national insurance. So that's basically it really for a sole trader. As I say, you can do it yourself, no problem at all. You don't need an accountant to do it. Being an accountant, I'd recommend that you do, but you don't actually need an accountant to do it. So lots of advantages to being a sole trader. It's easy to do. As I say, I keep saying it, you don't need an accountant to do it, but the big downside is that HMRC are making no distinction between you even as an individual and your sole trade business, which could cause problems further down the line if you get into debt. Okay, so that's a sole trader. Now, limited companies are a very, very different animal. Now, sort of building on what I've said before, if you're a limited company, then HMRC do make a distinction. So if you're trading through a limited company, then you as an individual and your limited company are two totally separate entities. So I'm Jason Blackman, and I have a company called Just Pure Limited. So in HMRC's eyes, Jason Blackman and Just Pure Limited are two totally separate entities. Now, following on with the logic of what I was saying just now, that also means that any company debts that you build up, HMRC cannot chase you personally for. So if, as in my previous example, if you've built up debts in your limited company, like again, bank overdraft, if there's loans, if there's HP, if there's a VAT bill, if there's corporation tax bill, HMRC cannot come after you personally for those debts. So it gives you a little bit more peace of mind, I suppose, trading through a limited company. And the reason is that your liability as a director, as a shareholder of your limited company, is limited, hence the title, to the amount of shares you have in the company. So again, I'll get onto shares another time, but most people, when they set a limited company up, if you're just a one-man band, then you would have 1 share for £1, and that's quite normal if you're a limited company. So yeah, that's what I would normally expect. So what that means is your liability is limited to £1, and that's it. So any debts that the company builds up apart from the pound, you're not liable for. So that's the big advantage of a limited company, that you're not personally liable for any debts that the company builds up. Now, there's a caveat there, as there always is. This all assumes that you're operating a limited company in a legal way. If you're operating a company fraudulently, or if you're doing something that's illegal in your limited company, obviously an individual can commit a criminal offence. I don't know why I pointed at myself there, but so if you're running a limited company and you're committing fraud or you're trading illegally, then HMRC can come after you, because that's obviously you personally would be liable for that. But if you're running your company absolutely fine, there's no problem at all, you're running it perfectly legally, and you're doing everything by the book, then HMRC cannot come after you personally as an individual for any debts that your limited company builds up. Now that, for me, is the overriding advantage of a limited company. Now, in the old days, in the good old days, tax was a massive advantage if you were trading through a limited company. You could draw a small salary, and you could take the rest in what's called dividends. And that was a brilliantly tax efficient way to take money out of your limited company. And you know, the argument for sole trader versus limited company, the small salary, high dividend route just won hand over fist because it was so popular. However, HMRC closed that loophole a few years ago, I think now. So tax-wise, there's no longer a massive advantage depending on the level of profit you're earning. Now, in general, I guess, if you're earning over 20k in profit, then you will normally make some savings by trading as a limited company as opposed to being a sole trader. Now there's a sweet spot, it's probably around between 20 and 70k. If your profits are between those two figures, then in general you will save tax by trading through a limited company. But sort of under 20k, the tax savings are negligible in most circumstances. And then over 70k, it becomes a little bit less worthwhile as well, because you're then entering the realms of dividend tax, and you know, you could get to a stage where the dividend tax outweighs the advantages. So there's a sweet spot there, but obviously, as I've said before, every individual's circumstances are different. But in general, between 20 and 70k, I'd say, then there's normally a bit of a tax advantage if you're trading through a limited company. But obviously, another advantage, I would say, of trading through a limited company is that you don't need to withdraw all your profits. So what that means, if you're a sole trader, let's say you make 100,000 in profits as a sole trader, even if you haven't drawn out £100,000 from your bank account, you're still taxed on that 100 grand profit. If you're a sole trader, you're taxed on the entire amount of your profit as a sole trader, even if you haven't drawn all that money out of the bank account. Now, as a limited company, that's not the case. If you make 100k profit, yes, the company will pay tax on that 100k profit, but you personally don't need to draw out 100k. You can draw out whatever combination of salary and dividends is right for you. And again, I will get into this in another video, the sort of perfect combination of salary and dividends. But what I'm trying to say is, even if you make 100k profit in your limited company, you don't need to draw that 100k out. You could just draw 40 or 50 or 60 and keep your personal tax bill down a bit. So there's flexibility in a limited company as well. I suppose that's what I'm trying to say. So yeah, I think I've covered the basic bits now. I don't want these videos to go on too long and you get bored, but I'm hoping I've explained the main differences between a sole trader and a limited company. So just to sort of in review, sole trade, very, very easy to set up. You can do it yourself, you don't need an accountant, and the tax return is very easy to do yourself. If you're a part-time business, you don't need to an accountant to fill out your tax return. It's not that complicated. So really, being a sole trader, you can do everything yourself if you want to, without using an accountant. If you're a limited company, then I'd reverse that, and I would definitely say you need an accountant. And there's a lot more red tape for limited companies. Again, I'll go into this in another video, but the admin costs of a limited company for you, if you don't do it yourself, and I don't recommend that you do, will be a lot higher. There's various things you have to fill out every year. There's annual accounts that have to be submitted to Companies House. Your figures will also go on public record, so you have to think of that as well. There's a yearly job you have to do called a confirmation statement that you have to do as well. It's all things that an accountant would normally do for you. I wouldn't recommend that as an individual you try and run a limited company yourself. So I guess maybe another disadvantage from the limited company side is you have got a lot more red tape, and there's accountancy fees. If you're not doing it yourself, if you're hiring an accountant to do it, then there's the added disadvantage, I guess, of accountancy fees. But you know, that's by the by. You know, I personally think that the limited liability factor is a massive plus for a limited company, and I really find that quite comforting, and I think a lot of clients do. As I say, tax savings negligible depending on where your profits are, and as I say, downside, limited company, lots more red tape. Once a year you submit your accounts to Companies House and your corporation tax return to the Inland Revenue. That's Inland Revenue, and that's very similar to your personal tax return, but it's for the company. So you've got your company accounts, you've got your corporation tax return, and you've got your confirmation statement that you need to file every year. So all those things you need to file. And the penalties for not filing with limited companies are a little bit hefty compared to being a sole trader. So red tape paperwork wise, there's more of a headache, I suppose is the right term, if you're a limited company, as opposed to the ease of a sole trader. But if you find that the tax advantages, you know, are worthwhile for you, for your individual circumstances, the limited liability is definitely something I think you'd find an advantage in. So if you can stomach the sort of additional accountancy fees that a limited company brings, then I think it is a worthwhile option. But I'm not here to say you should be a limited company. I'm not here to say you should be a sole trader. All I'm here to do is to talk about the differences between the two. So hopefully I've done that. I'm sorry if the camera's a bit shaky. I'm a bit of a bumpy road at the moment. So hopefully I've described that quite well, the differences between a sole trader and a limited company. But there is no right or wrong answer. There's nothing that's going to say yes, you should be a sole trader, or yes, you should be a limited company. It's very much up to you. But I would say in certain circumstances it's definitely worth thinking about incorporating your company, which means becoming limited. I hope that's been beneficial for you. Now what I aim to do is produce a video like this every single week. I'm going to upload it to YouTube on a Friday at midday. So what I'd love you to do in the comments below, if you can think of any areas you'd like help in with regard to accountancy, tax, bookkeeping, VAT, payroll, limited companies, etc., please drop me a note in the comments below, as it will be really beneficial for me to get some ideas on what you guys would like to see. But in the meantime, if you can give me a thumbs up, please. If you can subscribe to my channel, that would be fantastic. Just hit subscribe and then the notification icon, and then you'll get notifications every time I upload a video, which, as I say, will be every week, but you'll get a little email pop through just to remind you that I've uploaded a new video and what it's about, etc. And as I say, in the description there's a little link to my Just Pure, my practice contact page, if you're interested in becoming a client at all, or indeed if you want to know any information. You know, I don't charge for information, so if you want to ask me any advice or tips on your bookkeeping, accountancy, limited company, sole trader, etc., please do drop me a line through there. Obviously, if you've got any sensitive queries that you don't want published on YouTube, then send me a message through the contact form, link in the description page. So I hope that's been beneficial. Really enjoyed it. About 20 minutes, so I think that's pretty good. I hope you haven't got too bored with that. So any questions, comments or ideas for future clips, then chuck something in the comments below. In the meantime, hope you enjoyed that, and I look forward to seeing you all next week.